Welcome back to Trading 360. I'm Nicole Petalides. It's time for the 360 round, looking at lots of names in tech. Joining me right now, our expert panel, Logan Gilland's with us, analyst over at Jewel Financial, and Andrew Graham, CEO of Jackson Square Capital. Thank you both for being with us. Andrew, I'll start with you. You're watching the semiconductors. What do you think is happening here? Are there specific winners, or is there something about the group that seems attractive?
I think they're both. I would say we're constructive on semiconductors, and I think there's something about the group, and then there's select names that we like more than others because we do think that we're entering into a slowdown, and so that has implications for what you own. But generally speaking, if you've been around the street long enough, I've been in the business 40 years, you've seen a few semiconductor cycles come and go, and the down cycles have all these, there's 4 characteristics, 5 if you include the move in the stock. And this cycle checks all of those boxes. And so semiconductors are reasonably priced. They have a chance for upside. I just think you need to be positioned in the right names. So for us, those are the ones that are levered to automotive, data centers. And so we like analog devices and Broadcom. And then in equipment, we like KLA. And then in chip design, Synopsys is our pick. We see that a lot of the equipment orders don't get cut, and certainly there's usually, or there hasn't been in the past, any pullback in spending on chip design, and so Synopsys is a name to own throughout here, even if things get difficult.
Yeah, those were a lot of names that you liked in the group there, Andrew. So a lot of names for us to watch closely. Logan, you said you like some of the names that are exposed to the EV market. Tell us a little bit about that.
Yeah, I mean, if we're talking about tech as a whole, I think that we should see a bounce into the end of the year, but I think that it's going to have to be a little bit more selective than what we've had in the past, where you could just basically throw a dart or buy the big cap tech names and have no problem, and those are going to run. But there definitely is a change coming in the tech space and in the semiconductor space as well. I think we're seeing that today in the price action. I mean, if we got jobs reports that came out a couple months ago that were as hot as it was today, I think the market would have been crushed. But the market was down pre-market and has been bought up throughout the day. So you're seeing price action moves. But again, I think that moving forward, you have to be able to look out and find stocks that you go out and pick based on good balance sheets, healthy revenue, just all around good value companies. And we really like, in the semiconductor space, we like EV stocks, especially like an On Semi or a Wolfspeed, where we're really targeting, okay, what stocks are going to perform well and what are in the best spaces versus just buying the entire semiconductor space.
Understood. You also like Shopify, Logan, and Etsy in the world of e-commerce. I guess this is tech and retail put together. Logan, a quick thought there?
Yeah, so this is, again, in kind of the tech and retail space, instead of just going out and buying Amazon or the biggest names out there, looking for value. So we like Shopify and Etsy here. We just talk about Etsy. They have no debt. Their forward PE is about 50, which may seem expensive, but their revenue next year and their earnings per share growth is supposed to be about 150%. So we're looking for value in those different areas and really trying to find the right areas to be in and the right stocks to be in.
Okay. And then, Andrew, let's turn your attention to software stocks. You had a lot of names in the semis that you said were probably some good bets, and you were looking at those. You seem a little bit negative, but there are some good names fundamentally here. Explain that.
Well, I think we need a buying opportunity first in software. Software's got this overhead, or it's got this headwind, I should say, that's created by high real yields. So real yields are now positive 150 basis points. When these stocks were trading at 20 times sales, real yields, 10-year real yields were negative 120 basis points. And so that's the prevailing headwind on software, and that's just not going to go away tomorrow. So you need that to come in, and we'd look for 10-year real yields below positive 60 basis points as a level to start looking at buying software. I'll also say that the backdrop, the overall business environment for software sales is not good. The average software sales pitch is, if you invest in this, it's going to save you X dollars over these years. Companies are looking for savings right now, and that's through headcount reduction. And so I don't see it being a really good quarter coming up here in Q4. I suspect that you're going to see some more companies miss, And when they also announce earnings, they're going to guide down for 23. That's a potential buying opportunity for us. And so we think the spring, early spring, is probably a time to start looking at some names. We like Microsoft because it's #1 in all the CIO surveys. Snowflake, if the stock comes in a little bit more. We like ServiceNow and HubSpot are our favorite 4 names in software when we get there. And we think that's after Q4 earnings announcements and guide downs.
Oh, interesting. And Logan, what's the big picture here after we've had all the volatility, the sell-off in tech? We've heard from Powell, possible recession still looming. Logan, where do you feel about the big picture?
Yeah, I mean, over the last 6 weeks or so, we've seen that the market has rallied, and all of tech has kind of gone with it as we look for hopefully a Fed pivot in the future. But I think moving forward from here, and I do think that Fed pivot is coming, I think moving forward from here, you have to be selective about what stocks and what names you're getting into and find true value. You can't just throw a dart at a board and buy anything and it's going to go up in the tech space. You need to really be selective and not just focus on those big cap tech names that have been the overall leaders before, because I think new leaders are emerging.
Yeah, Andrew, what's your big picture look here?
On the market itself, we're not necessarily positive on the broad market. And so we have higher cash levels than usual. We're underweight tech, since that's the topic today. 2 years ago, if you would have asked me, we would have been 2 times the S&P allocation or weighting towards tech. We're about 2/3 right now to tech. So it's not our favorite place to be. We're a little bit worried about the market retesting in Q1, the lows from the fall, and maybe even making a newer low, 3,200 or something like that. We're going from worrying about inflation to worrying about recession. Real yields, like I said, are up 300 basis points almost. It's a startling move. It's the biggest I've seen in my career, and there's going to.
Nice to see you both. Thank you. Great look there at tech. Logan Gilland of Joule Financial, Andrew Graham of Jackson Square Capital. Thank you, Logan and Andrew.